Hello and welcome to Wake Up and Smell the Mic S&P 500 review. This is a special video looking back at the S&P 500 weekly chart with the diamond topping pattern in the COVID crash era. In this video, I will run through all the support lines, uptrend lines, and patterns within the chart with special focus on the May to July 2021 era here, where Powell and company should have at least started a light taper. It starts out back here in 2017, where there was election euphoria about tax cuts for the super rich corporations. And as you can read here in the beginning, Jamie Dimon declared the 10-year will hit 5%. Little did we know we would have had to wait 4 to 5 years for that to happen. And first up is this pattern here, this broadening topping pattern here with the red dashed lines, and it negated around the beginning of 21. You can see here when it busted out of there. But before that, there were several points where the top line and the lower line were hitting the end of these candles at the top and the bottom. So this pattern was a lot tighter. It just ended up very broad when it got to the beginning of 21. And it actually started on this second large red candle in February 18, and the line went like that. And then as it hit the top over here, we moved up to this first candle. So that got a lot wider, that broadening topping pattern. And here's a history of the Fed rate hikes. We're looking at 2017 here. And then it moved into 2018, which is where we're focusing at. So there were 4 hikes in 2018 after a few in 2017. So you can see in the 2017 era, way down here in the lower left-hand corner, that the market completely ignored those and actually went parabolic here. And then you can see the 2017 hikes took their toll at the beginning of February 18. We had that big downdraft. And then as you can see, starting in March 2018, the markets completely ignored that for the most part. Little downdraft here, but it ran up to October 2018. And those 3 hikes to date at September 2018 took their toll. And there was an incredible downdraft going into December. And then you can see that Powell had the nerve to slap another one on the markets. And I think the previous president said something to him to the effect of, "We're going to hang you by the highest yard iron." And so Powell took that one back in early January, right at the end of December, beginning of January, and it was off to the races again. And the next big event, as we know, was the COVID crash. And in there was a ascending, broadening wedge pattern in solid dark black here. And that was negated when it fell under the lower part of the broadening ascending pattern here. And it stayed under it for 3 weeks, so I negated it. And that was a 10.5% drop from when it fell under it down to the very bottom in March 2020. So even though that broadening ascending wedge was negated, I kept the top line solid black, and then I actually created another one from a lower point before this 2018 area, and that's in light gray, and that extended out. You can see what happened up there. And then the free money era started actually in late April and March and didn't go in effect until about June. And then when it did, it was the most oddest happening, that price actually started sinking. And that's when I told everybody to start buying when it hit this, at the time, dark blue lower line here of this pennant pattern that eventually formed. But at the time, there was just this lower blue line. And once it started climbing up that and hit up here a couple of times and formed this pennant pattern, I was pounding the table for everybody to start buying. And then S&P price really busted out to the upside here. And that's when we created the measure rule for the pennant breakout here at 46.7%, right at the breakout, and then moved it up to where it broke out. And you can see it turns into 31.8. I can't fully explain that phenomena. Someone told me about it, why it does that, but it's less percentage here than down here. But if I moved this here, it would be exactly the same as this 46.7 measure rule. And then there was a throwback a couple of times to the top of the breakout of the pennant here. Here's one here, off to the races, back down for the test, and that was it. That's that October-November low of 2020 where we went off to the races big time. And the, at that time, valid broadening top pattern here in dashed red was very good resistance. You can see it hit here, here, and it broke above it here and formed a doji for the week. And then that was it. It just came back down and tested it into this ad hoc blue zone here, and then finally busted out and went to the upside. And that's where we negated the broadening pattern here in dashed red. I just have the lower leg back further so it wasn't in the way of this. However, again, like this ascending broadening wedge pattern in dark black, I kept the top line and extended it out. So I extended out this top of the broadening top pattern here and dashed red all the way out to here, and you can see that it was still good support and resistance still to this day. So that's 3 years since that was negated, this broadening top pattern here in dashed red back here, and it's still being used today. As you can see, the COVID crash created this two-sided diamond topping pattern, and I extended the top of the diamond pattern out this way. It is now going off into oblivion, and then extended it from the bottom out. So that's the line, that's the weekly diamond bottom extension, bottom line here, and this one underneath it that came off of the same area is the weekly diamond extension, bottom line of the perfect uptrend channel. So what I did is I took a measure rule and I made it to where the measure rule fit here and here and here and here. So that's a perfect uptrend channel. That's why that line is called that. And you can see at the bottom of the diamond here, in March of 20, I was using closes and opens versus that very low that was just a bridge too far. The momentum carried it down all the way, but it was just because of momentum, so I used the close and the open here. However, from that very bottom of the COVID crash, I created these two lines, and this is the potential Gann angle in dashed red, which is around 38.29 to start the week, and then the other one is right above it, and that one's called the weekly uptrend Gann angle or something there, and you can see that it's been very good support. So price just went off to the races here, And then you can see when it hit the top of the measure rule from the bottom of the COVID crash that was moved up, it really had a pause here and was acting as very good resistance. And most everybody thought that was it. That's where the Fed is going to start slapping hikes on us, or quantitative tightening with the balance sheet roll off or something. And that will be a separate video after this one, entitled The Super Bullish Wedge Pattern, where the Fed's first mistake was. So ever since it broke out of that and headed up, I always called this entire up move, this whole thing, you just put your thumb over it, and I just called it illegitimate, as we should have had a downdraft here that probably would not have been as bad as this. We would have had a knockback from the Fed, but then we would have eventually started going up, so we could have avoided probably all of this. And it's quite possible to think that we could have been here or beyond that now, beyond this all-time high over here. But that did not happen. And you can see that price just kept going up, and it hit that gray line of that extension from the ascending wedge pattern here. And it got knocked back pretty good, and it hit that diamond top extension purple or pink line here pretty good, and just kept going. And I always used to comment and say, look at this uptrend line in blue with the arrowhead on it, not quite off the bottom, a little bit above it. A week after it hit bottom, I created a line here, and look at that, it just went straight up. And price just kept nailing it and moving up, nailing it and moving up, nailing it and moving up. It finally busted down out of it here and hit the top of the diamond line here, and then brought us up to here, where the Fed in November of 21, you can read it here, they warned the balance sheet roll-off will start in 2022. And that was definitely a warning that most heeded. As you can see, there was a downdraft, and it just absolutely nailed the top of the ascending broadening wedge pattern in black here a couple of times, and followed up and just kept going to the very top right over there. Then they announced in 12 of 21 that the roll-off will double due to the increased inflation. So they were definitely late from this area here. And did that scare anybody? You can see December right here, if we follow it up right there, that white candle. Yeah, there was a little knockback here, but then it just took off for the next 2 weeks, and that's when the top was over here. And here's a picture of how we treated that top on 01/04/2022. It's self-explanatory if you follow along left to right, and there are DeMark indications included in there. And the balance sheet roll-off didn't actually start until March of 2022 here. But there were plenty of warning signs the end of 2021 that 2022 was going to be rough. And that sure caught a lot with their pants down up here. And the rest is history.